Investment advisory services offered through Arca Investment Management, LLC, a registered investment advisor. The subject matter discussed here is provided for general information and educational purposes and is in no way intended as investment advice, investment research, legal advice, tax advice, a research report, or a recommendation. Any decision to invest or take any other action with respect to any investments or strategies discussed in this series may involve risks not discussed, and therefore such decisions should not be based solely on the information presented. Please consult your own financial legal tax professional. This discussion is not a solicitation or an offer to sell securities or investment advisory services.
Welcome to Connecting Nodes. This is David Nage.
And Michal.
We have been giving you a show the last few weeks and the last few months here where we were trying to connect the world's investors and builders. We were trying to identify what the founders who are building our future out there today are focused on, where the innovation is going, and what the potential new themes are on the rise. For investors, what does the world of digital assets look like in the next 5, 10, 15 years or more? So this is a collaboration with my colleague Michal. We've been doing this the last few months, as I said, trying to give you themes and trends and news and information that can make you a better founder and a better investor. So with that, let's jump right in. There's a lot to talk about. There's a lot of things happening. This month, we've seen everything. We've seen one of the largest companies in the world, the largest asset manager in the world, apply for a Bitcoin ETF. We've seen one of the senior congressmen in the United States Congress put out a new bill to try to give regulatory framework. We've seen deals happen. We've seen the rise of AI. There's a lot of things happening here, folks. So, we're going to get you in and out in about 15 to 20 minutes and try to give you as much info as possible. So, Michal, why don't you kick us off? What happened with, we'll start with BlackRock and this Bitcoin ETF. Let's start with that. Let's jump into some of the other things that are happening out there.
Right on. And this is particularly interesting time of the year as well, when we kind of chart back in time and look at the beginning or ends of different cycles that we have experienced here in digital assets. Bitcoin ETF applications are not a new or novel concept. In fact, for those maybe uninitiated or relatively new to the space, we've seen a steady pace of these ETF spot applications going back several years now, even all the way back to some of the earliest applications here with most notably Gemini back in 2017. That spot application was rejected by the regulators on the grounds of essentially immaturity of the market structure of this space, not being able for sophisticated institutional investor allocators to do it safely, securely, and in a way that will not expose the consumer, which is again a big mandate of SEC, the protection of the consumer, to get hurt. Now, since then, we've really made leaps and bounds in terms of the progress of the market structure. All of the components that have come from custody, compliance, KYC, but also a range of derivative products that have emerged to hedge some of the risk in the inherent spot market. Yet, all that work that has been put in a space, the regulators have been rather apprehensive on approving that Bitcoin ETF, and particularly the entrance of BlackRock into the fray here, filing that application about 2 weeks ago, might, according to many observers, signal a change of tide. And that has to do not only with the track record of BlackRock, if I remember correctly, they have something close to 570 ETF applications, out of which only one was unsuccessful. Just to kind of repeat that 570 to 1 is a rather incredible knockout ratio. And so for all of the flurry of applications and reapplications that are following now, very shortly after BlackRock ETF, could signal potentially a change where we will, in maybe not so distant future, maybe even coinciding around Bitcoin halving next year, get ourselves sustaining spot ETF, and then a number of others that should be followed thereafter with the approvals. So what does that essentially mean to the founders, investors in this space? Well, several important elements. One, the institutions have been coming in this space for as long as I can remember being involved here, but particularly the potential wave of capital that this ETF could usher is particularly meaningful when we are looking at some of the largest financial institutions out there that are trying to give ways for retail investor and institutional investors an exposure to this asset category. We are seeing quite a number of names, not just BlackRock, the largest. We have other smaller ETF sponsors like Wisdom Tree that have just also reapplied, all the way through other behemoths like Invesco and several others that will follow suit shortly. So all in all, incredibly positive. And just on that kind of final note, each and every of those ETF applications waves that we have seen in kind of the last 2-3 cycles does actually bring a net new inflow of capital. And that has been pretty remarkable to witness in the 2 weeks since that applications have taken place. We have actually experienced a net inflow versus an outflow of capital into that asset management industry around digital assets.
Let me ask you something here. So I saw Alex Thorne from Galaxy on Bloomberg yesterday. Shout out to Alex. Writes a lot of great research for Galaxy. Has been around forever. He said that it's been interesting to see that there's been the majority of the Fidelities, the BlackRocks, others out there focusing specifically on Bitcoin because he believes from a regulatory standpoint that it's the clearest one that hasn't been or designated or called out as a potential security. What do you think about that?
Yes, indeed. It has been the one that so far has been most de-risked from everything that has been published and kind of coming out, even in public statements from SEC, both SEC and CFTC. And I think this ties quite nicely to another big development of the month of June, and that has been the suits that have been brought forward for Coinbase and Binance by SEC, where essentially they are naming a number of different projects as unregistered unlicensed securities, and almost by proxy really point to the fact that there is very little outside of essentially Bitcoin that has been deemed as non-security type of asset, and so those two particular suits are very important for us as industry participants to observe and keep track of. And they're two very different in a sense, but they overlap and point in the same direction that SEC is increasingly aggressive campaign to bring cryptocurrency under its own jurisdictions of the federal securities laws. And so while Binance indeed stumbles, and we have seen not only that happen here in the US, but in other jurisdictions globally, where they are now just being either openly pursued by the local regulators or gently actually asked to exit and look for home elsewhere. Coinbase is a little bit different. They are definitely putting on the fight, and we are seeing from the statements from the C-suite at Coinbase that they will be going out into the defense mode, primarily on the grounds that they've been trying to go as compliantly as possible on their business, and so that I think is the element that I would signify. Points to kind of the questions that from everything that SEC and CFTC has quoted, there has been very little in a way of giving a go-ahead or green light into other assets in Bitcoin. So Bitcoin is certainly the first one that will lead the pack here.
I agree. I think another thing that's really interesting, so you alluded to the regulation side of things. One of the things that I thought also happened that was very interesting this month is Andreessen Horowitz, A16Z, is launching their office in London. And this was a signal, something that we've talked a lot about on the show recently, and something that, effectively we started to see that, we were kind of letting everyone know about. One of the things that was really interesting is Rishi Sunak, who is the Prime Minister of the UK, basically said in so many words, and obviously he gave a bit of a speech, but I'm paraphrasing here, is that he wants the UK to be the hub for Web3. And so they, along with the European Union, have been structuring MICA, something that we've talked about numerous times on the shows already, although the show's only 3 months old, but something that we've talked about. And so while we see what's happening here in the States, something that we have been seeing for quite some time is that other places around the world, especially large financial institutions, centers like the UK, Dubai, Hong Kong, have been opening their arms to the industry, and that's where we're starting to see a lot of the activity go. So very interesting to see that. We'll move to my favorite part of the show, valuations and capital flows. It has been slow, folks. It has definitely continued to be slow here, but we are seeing things still get allocated to and funded. As of this show right now, in the month of June, there's been north of about 250 million invested in the month, which is, as I said, a noticeable drop. Whereas this time last year, there was roughly 3.9 billion that was announced, and that's about a 93% pullback. Now, again, we've talked about this before. As we've seen with the regulatory issues here in the United States, the industry as a whole, participants like venture capitalists like us, have been on not pause, but have slowed down our allocations. We're looking for that clarity. We're looking for some sense of a pattern. And as I have been saying, and as Michal has been alluding to, we are starting to see that appear with the countries under MICA. We're starting to see that with the UK. We're starting to see that with Dubai and Hong Kong and other places around the world. So while things have taken a bit of a hit here in terms of fundings, there is still a massive amount of capital that is out there to be allocated. There have been funds out there that have been raising throughout this period of winter. And so, we definitely still have more capital out there with funds out there that have raised. There's about 102 million that has been deployed, which is about half of that to Series A's deals this time in June. And what we're noticing is that there's a significant pickup in the deals that have AI and digital asset crossover. And one of those that we wanted to highlight was Jensen. This was a fairly large deal, the Series A, with 43 million in fresh funding led by A16Z, which is meant to provide cost-efficient compute protocol for the world deep learning models out there. Again, what happens with AI is that you need a lot of compute power, you need a lot of storage, and we've talked about this before, but we continue to see that there is a confluence of digital asset infrastructure and things that are happening with AI. And so this is something that we are definitely watching ourselves here. The other deal out there was Lens. They raised $15 million for their social primitive protocol, which is built on top of Polygon's proof of stake chain. Lens and others out there like Farcaster. There are a few attempts out there to build the new version of Twitter in a much more decentralized way. And so that's what Lens is working on right now. Michal, why don't you kick us off on regulation? We alluded to it a little bit before, but there have been some things that have happened this month that have been hoping to pave the way here in the U.S., as we've talked about other things outside of the U.S.
And this indeed is starting to become a bit of a regulatory podcast, but bear with us as this is mostly the time and month where as the summer break is looming, a lot of it's trying to get accomplished, especially by all the insiders in DC, but in Europe, equivalently so. Over kind of here in the States, what we have seen at the start of the month is primarily the crypto bill brought by the Republicans in the House, laying out very clear roles for both SEC and CFTC. So both Representatives Patrick McHenry and Glenn Thompson introduced a bill that proposed a much more clear delineation of the authorities between these two agencies when it relates to crypto assets. So what is particularly interesting in the layout of the bill is how it will provide a pathway of registration, explicitly allowing the crypto securities to be traded on alternative trading systems, both under kind of the SEC's purview. The CFTC would actually continue to oversee the crypto spot commodity market under that proposed bill. And so what is particularly interesting and odd at the same time, and I think many commentators were very immediately to jump to try pull that thread a little bit, is the coincidence of timing of the bill filing with some of the DC Hill public hearings, and especially with regards to assets that will be deemed as these quote unquote crypto securities, and them being able to trade on these alternative trading systems. Well, we were actually struggling in our little research before recording to find very many of those ATS venues that could and have that license to operate stateside. There seems to be only one, which is quite bizarre, especially given that SEC has been saying for quite some time that the doors are open and they welcome applications. And so the one that has emerged, especially as a result of that hearing, has been Prometheum. Many industry commentators have jumped to kind of these tinfoil hat conclusions that there might be some sort of SEC psyops at work, especially given some of the tie-ups of not only the founding team, but also the type of testimony that really felt like reading almost directly from the SEC script as to what are kind of some of the main pointers or even kind of allegations directed at the industry for quote unquote kind of a non-compliant trading and asset behavior. Now, this is a developing story. We continue to kind of hear more interviews with the founding team at Prometheum. Laura Shin did an excellent interview yesterday. We encourage everyone to check out some of the cliff notes there. But one that continues to point out that what is going to be the shape and format of these venues will have incredible impact for this digital assets industry in the States specifically. How much of that is going to go offshore if this current regulatory environment prevails is anybody's guess. But we're already starting to see many of the active market participants quite openly saying that they do not have a ton of interest of trading on these ATS venues, especially because there is very, very shallow liquidity, if any. Prometheum, from what I understand, don't really has even any active trading pairs yet. So it is the capital really flows to where liquidity is at already in this space, and I think that's not going to change anytime soon, especially when it comes to kind of onshore operations.
Right. And before we get any hate mail from the likes of the folks behind EDX, I just wanted to also shout out that we are starting to see more institutionalization of exchanges, and so EDX is launching or has launched the last few days, or announced that that is an exchange that was in combination with Schwab, with Citadel. And a number of other Wall Street players as well. So we are starting to see something happen here. We will continue, obviously, to keep all of you posted on what we're hearing, what we're seeing on those different types of venues. Getting to one of my other favorite parts of the show is the trends and what we're starting to see out there in terms of trends. One that we're going to focus on a little bit today for the next few minutes here is the world of physical. I don't love this terminology. I don't think Michal loves this terminology. I don't think anybody in our industry really loves this terminology.
Please do better.
Yes, if there are marketing gurus out there, if people know how to name things better, please, for the love of all things holy, please help us name this. But the idea behind physical is the marriage of the real world assets, things that you would wear, for instance, and those that would be represented on a digital landscape, like a video game. And so this is a fairly significant idea that has already started to manifest itself in many different ways. And a few of the things that I wanted to touch on too, specifically, are one, Puma, which is, if you are not familiar, is one of the larger sneaker brands out there, is working with a group called the Gutter Cats Gang. Sorry, the Gutter Cat Gang. They are working with Puma and an NBA star named LaMelo Ball to release a non-fungible token and NFT sneaker collection. Now, for those that are also know much about sneakers, this is a massive industry. This is billions and billions and billions of dollars a year in sneakers. And so LaMelo Ball has already released two different types out there. The one before this was in combination with the cartoon Rick and Morty, which has a cult following. And so this is significant because his sneakers sell, they get a very significant following, and they have comboed to do this. So you will have an NFT, which is being done. You can go to Prement, which is a service out there that provides access to these things. It's an allow list platform. And you can work to try to claim one of these NFTs. And then the idea is that with the NFT, you not only have the representation of that digitally, but you also can then get the pair of sneakers, which are going to be very exclusive. Again, this is a idea that is manifesting itself over and over again, and something that we are watching a lot of. The other one, a little company called Nike, which already started to work in something called Dot Swoosh, which is part of their Web3 endeavor, is comboing with Fortnite's 240 million users. Sorry, let's just get that right. 240 million users with something called Airphobia, which is a virtual experience. And so it allows Fortnite players to visit the virtual Air Max themed island for 10 minutes or more, and they will receive something back in terms of a sneaker, a digital sneaker. Again, we're starting to see this happen now where large corporations, brands are really looking to see how they can lever things like NFTs and their pre-existing user base, which in this particular case, Nike and Fortnite have hundreds of millions of people looking at their stuff every single day. And so this is very interesting that we're seeing, again, Puma working with one of the biggest NBA stars and launching this NFT brand sneaker, and also Nike at the same time working in tandem with Fortnite. We think that this is really starting to manifest itself in a significant way. So that is the big trend for the month of June. As I said, there's a lot of things happening here. We have BlackRock, we have all the things that are happening with exchanges, we have regulation, we have this new physical trend that is starting to manifest. Hopefully we were able to give you some insight and some bits here to get you more informed. Of course, as I've always said, and Michal always, if you have ideas, if you have trends, you have things you want to alert us to, please, obviously, our doors are open. You can reach us on Twitter DMs or on socials. We look forward to obviously sharing more of what we're hearing from the venture perspective and digital assets, and we wish you all well. Take care. Bye.